of the we were looking at some of the technical, some basic aspects around how to review a stock using technical charts. And one of the key things that we had looked at was that we have to look at the SMAs and look at the SMA along with the market cap to sale. We will not look at RSI right now. We will look at it later. So maybe I'll just this is another metric called RSI. When it really goes down, then that's a good time to buy. When it is overvalued, it's a good time to sell. So when we look at SMA plus RSI plus this price to sales ratio, then it gives us a, when the multiple indicators correlate, right? Then it gives us a better, more confident buy or sell signal. So for example, at this point, there is low RSI, there is low SMA, and then there is low price to sale. So this is probably a very good point. But this is not, I just use this as a reference. I don't use this much and we will not cover it now. Maybe at least at an initial level, this is not required. So we will leave this now. And we were discussing that we have to look at the stock. A stock is cheap when its price is lower than all the moving averages. So when 50-day is lower than 200-day moving average, 20 days lower than 50-day moving average, we can take 8 or 10-day here if we want, and that is also lower than 20. And then the stock price has to be lower than all. At that time, the stock is at a very cheap level. Along with that, but just this alone will not give us the story. We have to look at its relative price to sales ratio, market cap to sales ratio. That's what we are looking at. And whenever both together are very low, then this gives us an indication that this is a good time to probably buy. But then this is not the only factor. We also have to look at a good financial performance. This given stock has to have a good financial performance. So now we have like thousands of stocks in the market, right? So can we go stock by stock and check? Yes, we can shortlist a few stocks like this, well-known companies, and quickly check like this. But is there a better way? So that's where we come across this tool called charting. And we will look at the SMA scan. So as you can see over here, we have made the same scan. What we have said is daily close is less than SMA 8. SMA 8 is less than SMA 20. Simple moving average 20 is less than simple moving average 50. Simple moving average 50 is less than simple moving average 200. So basically the price has to be like this, the way we have defined it. Price is lower, 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 and lower. But at the same time, we want good financial performance. So net sales, the quarterly sales is greater than the same sales of 1 year back. The net profit has to be positive, or we can say it is also has to be greater than zero. Then the net profit, quarterly net profit has to be greater than the profit that is reported, say 4 quarters ago. So we are making this greater than zero so that let's say 4 quarters ago, the profit company had a loss of minus 50 crore. And this time the company had a loss of minus 10 crore. Even then the quarterly profit of this year will be greater than the quarterly profit of 4 years ago. So we say we want the profit to be greater than zero and the profit should have increased and the revenue also sales should have increased. We are doing that on a quarterly basis. Now we also want to ensure the same thing is applicable yearly. So we are also looking at it on a yearly basis, saying that yearly net sales is greater than 1 year back sales, yearly net profit is greater than zero, and yearly net profit is greater than 1 year yearly net profit. Now after making this chart, we can basically run the scan. And then we can see we have a number of companies because the market is a little down. We have a number of companies here which can be used for further analysis. Right. So now this that particular chart that we have, that particular filter that we have discussed, we just tweaked it a little bit over here. So now as you can see, this 8 SMA is just hugging the price. So if we go in and we see here, this 8 SMA is just hugging the price all along, right? So even if the price comes slightly up, this 8 SMA will not show. So here what I've done is I've made a slight tweaks. I've made multiple tweaks, but over here we have not considered the 8 SMA. 1 minute. Okay, so daily close is less than 20, 20 is less than 50, 50 is less than 200. Right, that's what we want to see over here. And then sales is now here. What we have said is sales is growing fast. So the quarterly net sales has grown by 20%. Profit is greater than zero, and profit is at least 5% more than last year. So there are different tweaks that we can do here. We have said the revenue is growing very fast, even if the profitability is not growing so fast. And then we can run this scan. And then we can see here there are some 26 stocks. Right. And then, for example, there's a slightly different tweak over here that you can see. Okay. So daily close is less than 20 SMA. 20 SMA is less than 50. 50 is less than 200. And then we are saying quarterly sales has to grow by 10%. Profitability has to grow by 20%. I think this has come in multiple times. We have to remove it. We'll just remove it. Not sure how to remove it. But okay, we'll just add the new condition again. Close has to be less than SMA 20. This is our condition, and then we bring this up. Not sure if we can do that. Yeah, we can do that. We save the scan. So we can see here. Daily close is less than daily SMA of 20. Daily SMA of 20 is less than daily SMA of 50. 50 is SMA is less than 200. And then the sales has gone up by at least 10% and the profits have gone up by at least 20%, both quarterly and yearly. And then when we run the scan, we again find, say, 48 stocks. So this way, out of the entire stock market, we are able to find out which stocks have done well from which are financially, which have done better than the previous year, but the price is lower. So we don't have to go one by one, like we had learned, right? So this is one of the screens that we can use. Then we have to see which stock is what. If we want, we can even add a condition. I'm not sure if market capitalization is available. Okay, market cap is greater than, let's say, 2000 or 5000. Okay, not 20, it's 5000. And then let's run the scan and see. And then we find about 25 stocks over here. And then we can analyze which stock is doing well. So for example, let's look at any stock. We can look at any stock, but we just open the stock and then we start doing a further analysis. Another way in which we had done screens was based on our fundamental analysis. So for example, we had looked at many parameters that profit growth has to be good, right? Profit growth has to be continuously growing. So over here, you can see profit growth is greater than 20, sales growth of 3 years, not just 1 year. So consistently over 3 years, profit growth is more than 20%. Sales growth is more than 10%. And we have done the same thing for 5 years. And even last year, it has to be more than 10. And then we have done the other things we have seen. The return on equity, the return on capital employed. And then again, we are looking at 1 year, 3 year, 5 years, because that's what is available in Screener. The cash from operations, operating cash flow has to be there. Profit margin has to be greater than zero, low debt, right? And then we are looking at a price. The stock price has to be pretty low. So we have given a high price by 1.6. It has to be around at least 40% lower so that we have a good entry point. And then net block plus capital work in progress. So the current assets, the net block is all the current assets plus whatever is the assets, the long-term assets of the company, the plant machinery and all of that, plus whatever is the work in progress. So whatever work in progress is being done, new, say, factory is being put, That for this year has to be greater than that the assets, the overall assets, the factory machinery plus whatever was work in progress in the previous year, which means that the company is basically adding new assets. So we are saying financial performance is good. We are saying here that the metrics, ROE, ROCE, etc. is good. We are saying that there is cash flow being generated, company is profitable, low debt, the price is low, and the company is in expansion mode. So this is the filter that we have basically run over here. And over here also you can see there are some 16, 17, whatever results, right? So we can again arrange this. For example, as we see, we can arrange this by market cap, or we can arrange this by sales price, and then we can start exploring the companies. We will not go for the really small ones like this. We will prefer to go for the big ones. So we can start doing this and then we can start analyzing companies, right? So let's say, for example, and this is what I was looking at. Let's say, for example, we are looking at the NetWeb Technologies. For example, we are seeing this for the first time. Now, how do we analyze this? We see that this is one of India's leading high-end computing solutions providers with fully integrated design and manufacturing capabilities. Okay, let's look at the business profile. This offers some product and solution suite in designing, developing, implementing high performance computing solutions. 3 of the company's supercomputers have been listed. So this company basically makes a lot of high quality supercomputers. Okay, it has some manufacturing in Faridabad and it offers high performance computing, private cloud. So like we have Microsoft Cloud and Amazon Cloud and all, this offers a private cloud, some AI systems, high performance storage. There is some data center, and then it's software, software for its high performance computing systems, software and services for its high performance computing. Then we see, okay, it has done 500 plus super installations and so many installations and so on. And then, okay, this is the bifurcation. And then who are the industries? So it caters across various end users industries, IT, ITES, entertainment, media, banking, financial, insurance, national data centers, government, etc. We see, okay, what is the revenue bifurcation? We see that, okay, higher education has a lot of share, 36%, and then IT has some 40%. Okay. Who are the clientele? We see some IITs, some NMDCs, right? Institute of Nanotechnology, some 171 new clients, etc. High revenue contribution from the top 10 customers. It has collaboration with various high profile foreign companies. It has a good order book. So it already has 411 crores of orders and then another 3,400 in pipeline. And then we look at some growth outlook. It has some new manufacturing facility and so on and so forth. Okay, so now we get some idea of what the company business is. Let's look at the financials. When we look at the financials, we see the price to earning is very, very high, right? But ROC, ROE are very good. And then we see debt is okay, manageable, right? Very low debt. Current ratio and all is okay. And then sales growth is impressive. Its sales is growing very, very fast. There is new capital work in progress that is going on for this company. So this we see the main negative that we see over here is that the stock price to earning ratio is very high. Then we come down and we see its financial performance. And from 2019 onwards, it's available year on year, except for the COVID year. We see year on year it's increasing and it's significantly gone up from 130 to 1000 now. And profitability is also from 3 crore to some 100 crore. So the company is growing very fast, right? There is very good sales growth, very good profit growth. Everything is very good. And then we see cash flow is generally positive only from operating activity. This 1 year was negative, but generally positive. Company has fixed assets. Fixed assets are growing year on year. So the company is always investing in fixed assets. The company has good capital work in progress. Okay. So based on all this, we can say, okay, that this company looks interesting. There is FIIs. A lot of FIIs have invested from 10%. It's gone up. DIIs has slightly gone down, but okay, there's also significant DII investment and promoter is holding a very high share. So once we look at this, we can say, yes, this company is actually looking very interesting. So then what do we do next? We have to study this company in greater detail. So how do we do that in a in a quick and efficient way? So we can just open all these documents, its financial reports, DHRP and everything. We can download all these documents and save all these documents. Right. And then we can come over here to Notebook LLM, and you see here NetWeb Technologies. This is what I was doing today. We add the documents, we add all the documents, the financial performance, the quarterly results, all the documents that we can find, we have added it over here. Okay, so now we don't have the questions over here, so that is good. So let's start asking a question. What is the business of NetWeb? So now you can see this, we don't have to go through each of these documents and piece everything together. This Google LLM will go through this, Notebook LLM will go through that. It's an Indian origin, owned and controlled original equipment manufacturer in the high-end computing space. Company has fully integrated design and manufacturing capabilities. It offers a full stack of products and solutions with comprehensive capabilities in designing, developing, implementing high-performance computing solutions. And then we again see all this. Supercomputing systems, private cloud, AI systems, and so on and so forth. And then company has undertaken over 500 supercomputing systems, 50 cloud. We've basically seen all this similar to what has come there. It has a variety of customers, including all of this. Company is used. Okay, there are some technologies and Kubernetes and all that. If we have any doubts, we can always go to ChatGPT and ask, what is this? What is that? And so on. Right. Then after that, who are the customers of NetWeb and what do they use NetWeb's products for? Okay. NetWeb serves a diverse range of customers, so companies in the sector use this for various IT infrastructure needs. Businesses use for their specific requirements. NetWeb uses, then banking and financial sector uses the NetWeb for high performance computing solutions for complex data processing and high frequency trading. So the supercomputers are used for high frequency trading. Then there are national data centers, government entities, including defense sector, education and research sector uses this, right? And then it also serves as R&D organization of the Ministry of Electronics and IT. NetWeb provides its products to other types of enterprises, then high frequency trading, hospitals and factories. What are the use cases? What is it used for? For research, for simulations, and for complex calculations. Then they build their own private cloud environment. So instead of using Amazon cloud, if they don't want Amazon or Microsoft or anyone else to have access, they can build their own private cloud computing solutions. There are AI systems which are used for supercomputing, machine learning, deep learning, etc. There is high performance storage, so high quality storage. There is data centers. There is software and services, including hybrid cloud. Right. Okay. How has the company's performance been? Performance been in the last few years? What has management said about expected performance in the future? So company's revenue has increased by 76%, which is huge. Profit has also increased very fast, with 138 point whatever percent cumulative annual growth rate. EBITDA is increasing very fast. ROC is higher. Return on net worth is good. It has a lot of order books. It has a lot of pending orders. Debt has been lowered. So financially, this gives a good indication of the company's performance. Then again, recent quarterly performance, right? Year-on-year growth of 73%, quarter-on-quarter growth of 68%, operating EBITDA year-on-year 85% growth. And then we can see even here for the first half year, it's done well. Then what is management saying? Management has stated they are targeting a 30 to 35% growth rate in the coming year, and they are very confident of doing this. Sustainability. Management believes that the company's integrated design and manufacturing capabilities provide a competitive edge. It wants to focus on key areas and they want to expand their product portfolio and geographic presence. Company expects profitability to remain similar. It is also looking at good cash flow. The management is confident about the next few years, but they are saying beyond 5 years, we can't say anything. No one can say anything. It's generally difficult because it's in the tech space. We don't know what new technologies might come. Okay. So they have a strong customer base. They have been able to retain customers over the years. So this is again a very good positive thing. It is continuously expanding its customer base. There is continuous improvement in its capabilities. There is a lot of R&D going on, 4% of revenue. And then, okay, this is a generic sentence. We can ignore this. So we get a sense that from a financial performance perspective, the company's past has been good and the company's future is always also good. What are its competitors in India? Okay, so who else is competing against this company? Netweb faces competition in various segments from both domestic. However, the company has stated it doesn't foresee any domestic competition in the high-end computing solution space. So this is a huge positive. So the company has a lot of clients. A lot of clients are adopting the company's products, but it doesn't have any domestic competition in the high end. It considers itself to be in a unique position due to the lack of direct competitors that offer the same range. So this is again a very big positive for the company. And then key competitors across different verticals. There are different competitors, and then most of these, as you can see, are largely international players, NVIDIA and so on. A lot of international players, not many like Indian players, right? While Netweb acknowledges competition, it emphasizes its unique strengths. So Make in India, because of Make in India policy, say the government, institutions and others will typically buy from an Indian company, and this company has has a benefit. Proprietary technology, it has its own solutions, full stack solutions, and customer focus. Okay. Customer has partnerships with technology providers, and then it is an OEM, original equipment manufacturing partner with NVIDIA. And the company's supercomputers have been listed now 13 times. So we see, okay, this company doesn't have competition as well, at least in India. And from a Make in India perspective, this company can do well. Now, let's say, for example, we want to understand Netweb technologies in a simple way. So we can just go to ChatGPT and then we can ask, what is Netweb's business? Who are its major customers and competitors? What are its future prospects? And then what is the influence of DeepSeek? So there is one model called just like ChatGPT, there was one model from China called DeepSeek. This made its debut just a week back, and we see and the main thing was DeepSeek was very, very cheap, right? DeepSeek was very, very cheap compared to the ChatGPT. So ChatGPT cost about $100 million. DeepSeek cost about $6 million, or that's what they claim. We don't know the truth. And after that, once DeepSeek came into the picture, you can see this. The tech companies started going down, right? It's gone down by 13% in the last 1 month and so on. And if you look at Netweb technology share price also, due to the market correction and with all this company also was high from 2,800. It suddenly went down to 1,400. So what is the influence of DeepSeek? So again, I put on search, I've put on reason. It's a leading Indian provider of high computing solutions. It does this. These are its customers. These are its competitors. These are the future prospects. So there's rising demand in AI, government incentives and Make in India push. There is robust R&D. We have seen that. And then DeepSeek, the emergence of DeepSeek offers a cost-effective language model. And then see, they because Nvidia price and all went down because they said, hey, we won't need all your high-end computing chips because now we can do it with low-end chips. That's what DeepSeek claims. Right. But the benefit of that is that a lot more companies will start training models like DeepSeek for their own areas, pharma, for their own specific areas, research and so on. And for that, they may start using the products of NetWeb. Right. So we do this kind of research and then let's say we want rewrite it in simple language. So let's say we want to understand it in a simple way. So then it says it builds high performance computer systems, design and manufacture, including supercomputers, private clouds, AI server storage. They're used for complex tasks like large scale data processing, AI, scientific research. They serve a wide range of customers, including IITs, ISRO, etc. Globally, they compete with big names. In India, they don't have any major competitors. That's what it says. Future prospects demand for AI and high-end performance is growing rapidly. Government programs like Make in India help boost the company. They invest in research and development. Okay. Now, DeepSeek is an AI company that has developed an AI model at a much lower cost. This breakthrough shows that advanced AI can be made cheaper. And then as more organizations start using AI, the need for affordable, powerful computing systems like those offered by NetWeb is likely to may increase. We don't know for sure. Right. So then with language like this, now, for example, advanced research and development. So let me put this. What are the use cases? Give the specific use cases for which NetWeb is used by the customer. Okay, so it is used in research and development. It is used for weather systems and forecasting. It's used for some fluid dynamics, etc. It is used for drug discovery. It is used for urban modeling and flood prediction. It is used for seismic imaging, earthquakes, and looking at the this one for telecom optimization. So these are the kind of high performance systems for which the end customer uses this. So we know that ChatGPT is just a language model, and DeepSeek, etc. I mean, they cannot be a replacement or they are not a threat. This is used for very specific purposes like that. And then we see there is image processing for powerful graphic capabilities, image processing, rendering, scientific and engineering tasks. And then there is some blockchain related stuff, right? Used for high data intensive applications, parallel file systems. Okay, these are slightly technical stuff. We'll not go into that. But by looking at this, we get an idea. BSFI it is using it for high frequency trading, complex financial data processing. Media and entertainment uses it for data management. Then government and defense uses it. Enterprises use it for high availability good systems. Okay. So with this, we get a sense of what the company is and what it does. So we don't have to go through all the documents. Thankfully, we have these kind of AI models which we can now use. Now let's look at this. Okay, we have understood what the company's documents are, but what about analysts? So we come here, we come to reports, and then we have a lot of analysts over here. We have analyst reports like this. Okay, so if we just click on it up to 5 a day, we can see and download it for free. So we can open these analyst reports, download the analyst reports, and then add it back over here again. Right, we can add it back over here again. And then after adding it, we can ask the question. What do analysts think about NetWeb? So what are they saying? Analysts have a positive outlook, citing its strong growth potential and unique position in the high-end supercomputing market. Very good growth expectation. We have seen that. Very good profitability. It's a leading Indian original equipment manufacturer in the high-end computing space. Right. It has a very good, unique model. Not everyone can start making high-end computers. Very difficult to replicate. Strong order book. It has a lot of orders that are pending that it has to fulfill. Has a good government support from Make in India policy. Right. It is expanding geographically. We've already seen that. Strong financial performance. The growth in AI and increasing demand for data centers are viewed as major growth drivers. Then there is very good customer retention that the company has. And then the company has good, strong ROE. The high PE is the negative. So here, points of caution, high valuation. The company is trading at a very high PE ratio, right? And then despite its strong position, high-end computing market is competitive with large players such as IBM, Nvidia, HP and all. Okay. What are the key risks for this company? Okay. So there are several risks that have come over here. A lot of these were in the DHRP, which I had opened and seen. So it relies on its top 10 customers for revenue. If any customer drops, then there's a problem. It has a product concentration. It selects few high-end offerings, high-end computing solutions. That's where most of its revenue comes from. Right. It depends on some application industries. Then working capital, it has to manage its working capital properly. There's a lot of capital expenditure. Manufacturing equipments are subject to risks such as equipment failure, power supply, etc., etc. This is there for any company. Then they have to protect their intellectual property. Then it is highly dependent on R&D. And if they don't keep pace with technology, that's a problem. They have to manage all their inventory components and finished products, because if they have excess inventory and all, they can't store it for years together. Computing advances very fast. Okay, then some insurance may be a challenge. That is what is written over here. Company depends on key managerial personnel. Company has some amount of debt. We've already seen that. Company relies on leased premises. Then it has some contingent liabilities and so on and so forth. We see these risks. So based on this information, we get a sense of what the company is, what its strengths are, what its weaknesses are, and so on. So in this way, even if we don't know a particular company, just by using the filters, right? We have this filter, this is another filter. It's a very similar filter, but it just considers a 3-year perspective. Profit growth is good for 3 years. Sales growth and profit growth are strong. ROE is good. ROCE is good. Cash has to be positive. Profit margin is greater than 0. Debt is low. The company is adding assets and factory and all that, and price is low. So based on these filters, we can get companies like this, and then we can analyze companies in this way to get a better picture of what is going on. Now, even if there's something we don't understand, right? So for example, we don't understand what is seismic imaging. We can just come here and we can ask that question and we will understand it very easily. Right. So in this way, using the it is used to create pictures of what lies beneath the Earth's surface. Small explosions or vibrational devices send sound waves. They record the echoes. They create an image to understand what is going on under the Earth's surface. So based on this, even for slightly technical and difficult areas, we can understand the organization better and we can we can slowly start making decisions in terms of, okay, what does this look like? Of course, just by looking at this, it doesn't mean we go ahead and take a decision to invest or not to invest. But as we start learning about more and more companies like this, as we start spending more and more time with companies like this, then we will get a better and better understanding of particular companies of particular sectors. So it can be financial sector, it can be tech, it can be anything, right? Pharma, it can be anything. And in this way, we slowly have to keep building our understanding, and then we can slowly start taking investment decisions. So we can also do this. We can also come to some YouTube and see, let's see, NetWeb technologies, and let's see if there are any videos. Okay, so we see some videos like this, some CNBC TV and all of this. So in this way, we can typically filter out what the organization is. Okay, so here we see a video, 30 minutes. What are the key driving factors for NetWeb technologies? So we can watch this video. And in this way, we can get an understanding of a company, and then we can take a decision on whether to invest or not. So that's how. So based on all the knowledge that we have learned so far, we can use this kind of a technical filter. We can use these kind of fundamental filters, and then we can shortlist the companies, and then we can learn more about the companies, and then finally we can take a decision. So over time, so let's say we have understood one company. Now this company, NetWeb, is going to be there for many, many years. So now that as we study it, all we need to do now after next quarter is they will have the latest quarterly result, they will have the latest annual result, etc. We just keep uploading it and keep continuing the analysis. And this way, once we have a set of companies, we understand it that initial effort is high. But after that, once we put in that initial effort, after that, it becomes easier to track companies, right? So using this method, we can enter companies, and then of course we know our techniques to exit companies. Market cap to sales or PE ratio has to be very high. The moving averages have to invert. Right, 200-day has to be less than 50-day, less than 20-day, less than 8-day. And when we see those factors, we exit the organization. Okay. So I think that was just a summary of how we can analyze companies. So any questions?